Hey, everyone, and welcome to the Always On Point podcast here with Kristen Ambos. Thank you so much for joining us yet again this week. And I wanted to take a different spin on today's podcast because I felt like it was really important to talk about credit score. We don't talk about them enough. And to be pretty honest, there's not a regulation that says if you do this, then this, or if you don't do this, then this on credit score. So it's something that I talk about quite often with clients. I mean, every deal we have to pull a credit report. And every loan company you work with would need to pull a credit report. So fun fact, if you are getting multiple quotes from a loan officer and somebody tells you that you cannot pull credit to get another quote, that's wrong. You can. Typically, you have about 30 days to pull quotes from mortgage people. And that way you can now shop your interest rate without having to worry about multiple credit report pulls, because it is not your fault, right, that we have to pull credit on every single client in order to truly get a depiction of where they're at. Now, the next question on that becomes, well, will you only do a soft pull? Yes, we can do soft pulls, but what I have learned over the years is that soft pulls don't equal the full story. We've actually just done soft pulls in the past, got an accepted offer, pulled the whole credit now, and things have come up. The soft pull does a good job of telling you a little bit about the picture, but it does not give you everything as much as a hard pull does, which is why a hard pull is so very important to your lending. One of those things that you're doing when you are borrowing money in a mortgage, for example, is you're taking a couple $100,000 or more dollars and you're essentially investing that into a home, right? And so credit is what tells us how you pay bills. And now let's say you're a cash is king guy or girl, and you don't have any credit because you pay cash for everything. That's great. And, more power to you, because a lot of people just don't do that where they go on to, heavy credit card debt and things like that, which we'll talk about later. But in this respect, it does not tell a lender if you pay those bills on time. Yes, you pay cash, but do you pay cash late? Do you pay cash early? We don't know. So that's why building a credit score is so very important. You've heard me talk about on this podcast setting a credit score, and instead of using a credit card, maybe do a secured credit card with your bank. And if not, I'll refer you back to a podcast I did with my daughter earlier on where we did a secure credit card for her using all of her own money. And within, I think it was less than a year, at 18 years old, she had a 750 credit score by utilizing that. So there's great ways in order to be able to build credit. And one of the things, I have my phone out here because I wanted to make sure I was quoting it correctly. One of the things that I heard on a podcast I was listening to over the weekend was that credit scores are probably the highest they've been on a year-over-year basis. And that's one thing that's really exciting. In fact, I wanted to circle back on it because as of today, the average credit score is a 713. That's pretty cool. Back in 2024, it went from 691 to 716. So they're about 3 points apart, but that tells me that from 2024 to 2026, we're really holding steady on the average credit score for consumers being in that low 700s. Now, that's awesome because when you're looking to get into a mortgage, you want at least a 620 score. Now, can we do loans for people under a 620 score? We can, but then now you are probably going to lean into a higher down payment, paying more private mortgage insurance, leaning on an FHA instead of a conventional, things like that. When your score is lower, you do narrow down the amount of actual loan products you can use. And so I wanted to just bring some light to that because at a 713 score, you pretty much qualify for any loan programs out there, which is awesome, right? Go up a little bit more to a 760 score, and that's where 760 and above is going to be treated as your highest credit scores. And that's where you're going to see your lowest interest rates available, especially if you have some down payment of sorts and things like that. So Private mortgage insurance will also be cheaper. The higher your credit score, the more you put down, the less your private mortgage insurance is if you're not quite putting 20% down. So while the score is well above the average that we were even, 10 years ago, it's still sitting steady. And I found that to be really exciting because that tells us that more people than not. In fact, nearly half of all consumers, up to 48.1%, hold credit scores of 750 or higher. So that just tells you that there's a huge amount of people with really good credit. And why that's important is because I think far too often we hear about all the negative of credit, right? And instead, let's hear the positive, that we've got just shy of 50% of consumers are over a 750 credit score, and the actual average is a 713. So that would mean that most Americans, if they set up their finances correctly, and if they do the things they need to do to prepare, can absolutely qualify for homeownership. And that's going on to the last few podcasts that I've talked about. And if you follow any of my social media and see my reels and things like that, you're going to see that, yes, we're calling out different ways to save money because I do think with every choice you make, there's a consequence. And, I far often hear people say, I can't afford a home. But I don't believe that. I believe, yes, you can. That's my own personal belief. Do I think that there are some people who have, suffered more than others? Yeah, of course. But there's also such a bigger picture out there where if you just sit down with the right loan officer and strategize, you could then become that homeowner. Okay, so what are we going to do with that good credit score? Well, let's strategize. That tells us that if you have a 713 or above credit score, you typically have sustainability of making your payments on time. Your history says that you pay your bills on time. And when you do that, a lender like myself, who's going to borrow you a couple $100,000, feels better about getting my money back on a monthly basis because you've shown your credit worthiness, if you will, on paying those things on time. Now, if you have a lighter credit score, it doesn't mean I still won't lend you the money, but we might have to do some different things to make sure that the risk is there. Now, the lower the credit score, now we have a little higher risk. So what do we do to minimize that risk? Job time. Long job time will help minimize that risk. Again, bad things happen to good people. And sometimes somebody who had a 700 credit score ends up in the mid fives. Doesn't mean that they're not credit worthy to buy something. It just means now they have to have a little bit more of that quote unquote skin in the game. Maybe a little more down payment, maybe a little lower debt to income ratio, good job times, some really secure retirement accounts, things of that nature. That will always help. But for the sake of this podcast, we're speaking those at 700 above. Those credit scores will get you into conventional financing, FHA, VA, WIDA, USDA. There's so many different scores, DSCR loans, bank statement loans, all the like. So credit really is important. And that's why even if your credit score isn't to where you feel like it needs to be, we would still help work with you to get that score up. Or there are a lot of credit repair companies out there who would help you do what you need to do in order to get that score up. Those are all possibilities. And a lot of people just feel paralyzed by it and just don't know where to start, or they don't understand where they sit in the realm of what's the average. Am I below average? Am I above average? There are people, right? It's all about perspective. There are people who are at a 700 credit score that think their score is terrible. I'm here to tell you it's not. And then there's some people that think 700 is the most amazing score that ever existed. And again, it is not. Is it a good credit score? Yes, it is. Is it a workable credit score? It is. Can you get higher? You sure can. I think as I record this, the highest credit score out there is about an 850. And to be fair, I don't see a ton of those either. And when I do, it's typically people who have had really, really good credit for the last 30 years. Okay, so if you have a lower credit score, let's say a 680 in that range, but your scores are newer because you haven't had a credit score, that's not a bad score. You're still building and you're still getting up there. So the more we can talk about credit and the more we can normalize credit, the more we can understand something that has no playbook, right? It doesn't say if I miss a payment, I'm going to lose 20 points. One person may lose 20 points by missing a payment. One might lose 100. There's not a whole lot of rhyme or reason on that because there's so much that goes into that credit score. So again, don't want you to be paralyzed by not understanding it, but I want you to know what your options are with it as a lender, if you are a mortgage lender, if you are looking to buy. Okay. And I also want to just reiterate that yes, a soft pull is great, but they've basically scared people into doing a hard pull at all. And if you don't pull your credit score off, and a hard pull is not something to be scared of, you're not going to lose a ton of points by doing it. Don't be feared into that. But again, you want to be careful. You don't want to over pull it too much because then, yes, your score will fall. But if you are getting and shopping for a mortgage and you're going to shop between, let's say, 2 or 3 lenders, and if you're new to this channel, 25 years of experience in my own business of writing mortgages, and I can tell you if you get more than 3, you're confused, you are out of your mind, confused, don't do it. But I do suggest finding somebody who, and I wouldn't even talk credit score. I'm sorry, I wouldn't talk interest rate. Talk to the loan officer. Find out how versed they are. Because if they are a well-versed loan officer who knows what they're talking about, knows what they're doing, they're typically with a company that's going to provide really competitive credit scores I keep saying credit scores. They are going to have very competitive interest rates and fees because no loan officer that's very good at what they do are working for a company that's got high rates and fees all over the place. They've done their due diligence. They're working with a company that they know, like, and trust so that they can do business with you. So again, come back around to that. Meet the loan officer. Have them talk to you about their credit. What does it look like? What is it going to go? Do you see any risks with it? What's the rewards for the work I've put in? Things of that nature. But get to know that loan officer. Have them understand what credit score is, what your options are, and what you can do to best advance that score for you later on, because people are genuinely interested in what their score is and how it can be better. And that is one of the first times in my 25 years is this last couple of years where people are protecting their credit scores more than ever. And as somebody who started out in life with like a 450 because I was stolen from early on. I had credit cards that were put out in my name and maxed out when I didn't even know that was in existence. And it was a family member. It hurt. It hurt a lot. It took me 5 years to build my own credit score to recover. So it is something that I am very particularly interested in. And I have found that other people are as well. And they want to know not only how do they build it, how do they do so the fair way or the right way, right off the bat. So all of the work they're doing is being used for good. Been there. I've done it, tried and true myself. I do not judge a score because you don't know what somebody else has been into. But if you want to build it, we're here to help you. And if you want to build it to get into a mortgage and really game plan on what that looks like in timelines, that's what we're here for. We want to help you build a better life that you want to build for you. Whether that be through credit score first, mortgage, homeownership second, whether that just be to get yourself out of debt so that you can be a homeowner in 5 years. I call that job security, right? I need homeowners in 5 years the same way I do now. Now doesn't mean you're ultimately ready to buy a house, but if you start doing the things, which typically start with credit, and then sustainably and consistently have a job and a credit score and income and bill pay, all of that goes together, you will have a much better time, a much better interest rate, all the fees alike when you want to be in homeownership, whether that's this summer, next summer, or the one after that. That's what we want to do. We want to be your partner in helping you get to that level in your timeline. And again, that doesn't mean buying a house today. Sometimes that means buying a house in 2 years, and that's okay too. But if you don't start now, you're not going to start in 2 years. So this is my offer to you. If you are somebody out there who wants to get started, who just doesn't know where, my team and I want to help get you there. Because what we find too is a lot more people are ready now than they even thought they were. And there's some who think they're very ready who need some work. So if we start with that positioning of working together sooner versus later, we can do everything we can to help you get into that home ownership that you want to get into, again, whether it's in 6 months, a year, 2 years. Doesn't matter. So just a really quick clip on credit because I find it to be so important. You know, when they say credit card debt is through the highest and no one can afford anything and things of that nature, credit scores are holding tight, which tells me a different story. And I think that matters more. The statistics of 48.1% of consumers have over a 750 score, and the overall average score is a 713, which is way up from even 10 years ago. That's a step in the right direction. And that's people who are really pulling in, honing in on their own finances, taking accountability for those so that they can get into the next steps. And those are people I want to work with all day long. So thank you again for listening. We appreciate it. We can't wait to see you next week on the Always On Point podcast here with Kristen Ambos. Until then, have a great week. We'll see you next.